Basically, America has two choices, or one of two choices. Either she protects the currency and lets the economy go hang, or she tries to protect the economy and financial markets at the expense of the dollar. A long time ago, John Pierpont Morgan, who founded the Morgan banks, a number of them, said gold is money and all else is credit. And that is still true today. And it's so important to know what is money and what is credit. Money is only gold, as John Pierpont Morgan said. All else is credit, including currencies. And this includes the dollar. This is now important because risks in credit, risks in currency are escalating rapidly. I mean, this has been a trend for a long, long time. Back in the 19th century, the dollar was fixed at the equivalent of $20.67 to the ounce of gold. We had then the $35 fix, which basically was 13.7143 grains of gold. This is the way it's technically described. Now that has now fallen to 0.11 of a grain today. So this has been a long-term trend, and it's about to accelerate. And I'm just going to tell you why. We saw that the attack on Iran was a major, major blunder by America because they have failed in their objective to overthrow the regime in Tehran. Consequently, oil prices have risen. Now, they have only been suppressed in their rise by the American policy of drawing down on their strategic petroleum reserves. They have used this, in particular, to supply not just Europe, but also Japan. Japan, which depends on 90% of its oil and LNG coming from the Gulf. That has been replaced, or certainly the oil element has been replaced by massive shipments across the Pacific from America. Those strategic petroleum reserves are now running dry. This is what is leading to the crisis in the yen. We have seen the yen fall against the dollar this year substantially. We have also seen interest rates in bond yields in Japan rise significantly. That is a situation which is accelerating. And when the world begins to understand that Japan now faces far higher oil prices, they will look back to the 1970s, the last time this happened. In those days, the level of debt to GDP was roughly 20%. But the oil crisis, the OPEC reference oil crisis in late 73 and early 74, ended up driving inflation at the consumer price level in Japan by between 25 and 30%. Today, recorded inflation is only about 1.5%. That is obviously going to have to rise. And not only that, but the cost of funding Japan's government deficit is going to rise to unaffordable levels. In effect, their debt mountain has run into a brick wall. That means that Japan, which has been a major exporter of capital over the last 20 or 30 years to G7 economies, specifically including the US Treasury market, where it is the largest individual national holder of US Treasuries, that tide threatens to reverse. A collapse of the Japanese economy and its funding will actually affect the rest of the G7, undermining their economies. And we've already seen that the yield on French government bonds rose almost 0.5% in the last month. And that was undoubtedly due to Japanese institutional selling. This problem is going to affect everybody, not just at that level, the withdrawal of global investment flows, but also because the consequences of the strategic petroleum reserve running out is that oil prices will go much higher. And with higher oil prices later on this year, we will see a rise in consumer price inflation. And it will be considerably more than anybody currently expects. The consequence of that is that bond yields everywhere will have to rise further. And if you look at the chart of the US Treasury 10-year yield, you can see that it is breaking out of a consolidation and threatens to go significantly higher. And you can see this on the chart, which I present here. The conclusion basically is that credit risk is increasing and increasing and increasing. Now, China recognizes this. When President Nixon took the dollar off the Bretton Woods gold standard, which was meant to be temporary, incidentally, China in 1971 basically said this would end in tears. It would end in the collapse of the currencies. They have planned ever since Mao's death to protect the Chinese economy and the Chinese yuan from such a collapse. And from their actions after Trump's April the 2nd Liberation Day, China has stepped up its moves to protect the yuan. And inevitably, it means putting the yuan on a gold standard. You can see for the moves they've done to free up the movement of gold out of the mainland into Hong Kong, that there is a new connection between the Hong Kong gold market and the Shanghai Gold Exchange. This is extremely important, and few people realize that free flow of gold is necessary for a new yuan-backed gold standard. If you look at the Russian economy, Russia equally could go on a gold standard. But where does that leave the G7 currencies? Well, the answer is that they do not have the political room for maneuver to go back onto gold standards. And this assumes, in the case of America, that the 8,130 odd tons, which she says she has in Fort Knox and elsewhere, actually exist. It hasn't been audited for a very long time, and there are big question marks over that gold. Nevertheless, she cannot go onto a gold standard because, in order to do so, means cutting public expenditure radically. And it will be doing that at a time when the private sector is being driven into an economic slump by what's going on now in the Gulf and the loss of that oil, and Iran effectively holding the West to ransom over it. And at the same time, government expenditure will rise because of welfare costs, income will drop because of tax revenues falling, and there will be the Keynesian imperative to keep the private sector going by stimulating it with more credit at the government level. And this means more quantitative easing. Against that background, basically America has two choices, or one of two choices. Either she protects the currency and lets the economy go hang, or she tries to protect the economy and financial markets at the expense of the dollar. And that is why, at this time, it is so important to realize why gold is money and all else is credit. And I would like to conclude by saying that I will be speaking at the New Orleans Investment Conference on October the 30th. Von Greyerz will have a booth there, and anyone who attends that conference is welcome to come and meet us there. And I very much look forward to that. Thank you.